Let's jump into it today. We're going deep on Forex lingo.
Forex jargon.
Yeah, exactly. All those weird terms you hear thrown
Yeah.
around. And, for someone getting started in Forex,
Right.
it can sound like a completely different language.
Oh,
Like,
absolutely. It's intimidating.
yeah, it is. And so today we're going to break down some of the key terms, hopefully make it a little less scary, a little more understandable.
Demystify it a bit.
Yeah, exactly.
Yeah.
And, we're going to go a little beyond just like the basic definitions.
Right.
We'll talk about what these words actually mean in practice,
Right.
how they affect your trading decisions, and, just try to give you a better feel for the language of the market.
Yeah, because just knowing the definition of something like a pip doesn't really tell you the whole story,
Exactly.
You got to understand how that actually plays out in your trades.
Right. Right.
How those tiny little movements can add up.
Exactly. So let's start with pips, because it's one of those words that just sounds so strange.
It does. It sounds like something you'd find in a fruit salad.
Right. Like I remember when I first heard it, I was like, what? Are we talking about like orange pips or something?
Yeah, like a tiny seed.
Exactly.
Yeah.
But in Forex, obviously, it means something completely different.
Totally different.
So can you break down for us what a pip actually is in Forex?
Sure. So a pip is basically the smallest unit of price movement in a currency pair.
Oh,
It's like the tiniest little change you can see in the exchange rate.
so like how much is a pip worth? Is it like a penny?
It's even smaller than that. It's usually like a fraction of a cent.
Really?
Yeah. So, on its own, a pip might not seem like much.
Right.
But when you're trading large amounts of currency,
Yeah.
those pips can add up big time.
So like if you're trading, say, $1 million,
Mm-hmm.
a single pip move could be the difference between.
Hundreds of dollars.
Wow, yeah.
Yeah, so they're definitely not something to ignore.
Okay, that makes sense. So we got to pay attention to those pips.
Absolutely.
All right, so let's move on to another Forex term that always seems to like capture people's imaginations.
Okay.
And that's bulls and bears.
Ah,
Now, everyone's heard these terms, but can you explain
Yeah.
what they actually mean in the context of Forex trading?
of course. So bulls are basically traders who believe that the price of a currency is going to go up.
Okay.
They're optimistic, they're bullish on the market.
Right.
And then bears are the opposite.
Okay.
I think the price is going to go down.
Gotcha.
So they're pessimistic, bearish.
All right, that makes sense. But like, how do you know if the market's going to be bullish or bearish?
Well, that's the million-dollar question, right?
Yeah.
There are a lot of factors that can influence market sentiment.
Okay.
Like economic data, news events, even just the overall mood of the traders.
Gotcha. So it's kind of like a guessing game?
Not entirely. I mean, there's no way to predict the market with 100% accuracy. But skilled traders can analyze all those factors and try to make an educated guess about where the market's headed.
So, like, let's say you're looking at the euro, right?
Okay.
And you see a bunch of positive news coming out of Europe.
Right.
Maybe the economy's growing, unemployment's down. Would that suggest that the market might be becoming more bullish on the euro?
Potentially, yeah.
Okay.
That kind of positive news could lead to more people wanting to buy euros,
Right.
which would drive up the price.
So if you were a trader, you might see that as a signal to buy euros.
Exactly.
Gotcha, gotcha. Okay, that's starting to make more sense now.
Good.
All right, so we've talked about pips. We've talked about bulls and bears.
Mm-hmm.
There's one more term I want to touch on today,
Okay.
and it's a word that always sounds kind of scary to me,
Right.
and that is hawkish.
Ah, yes.
Like when you hear that word, you just think of like a hawk, like
Yes.
swooping down and, being all aggressive.
Yeah, like a central bank with sharp talons.
Exactly. So can you explain what hawkish actually means in the Forex world?
Sure. So hawkish is usually used to describe a central bank or a policymaker who's in favor of higher interest rates.
Right.
They're often seen as, more aggressive in their approach to controlling inflation.
So like the Federal Reserve, right?
Exactly.
They're the ones who set interest rates in the U.S.
That's right.
And sometimes they'll raise interest rates to try to slow down inflation,
Mhm.
and that would be considered a hawkish move.
Exactly.
Okay, gotcha. But why does this matter for Forex trading? Like, how do interest rates affect currencies?
Well, higher interest rates tend to attract foreign investors
Okay.
because they can get a better return on their investment in a country with higher interest rates.
Right.
And that increased demand for the currency can push up its value.
So, like, if the U.S. raises interest rates,
Yeah.
the dollar could get stronger.
Sure.
Okay, that makes sense. So if you hear someone talking about a hawkish central bank,
Yeah.
you got to pay attention to what that means for the currency.
Absolutely. It can have a big impact on your trading decisions.
All right, so we've covered a lot of ground today, from pips to bulls and bears to hawkish central banks.
Yeah, we've hit some of the key terms.
And hopefully this has given you a little more confidence in understanding the language of Forex trading.
And remember, this is just the beginning.
Right.
There's always more to learn.
Exactly. But for now, you're well on your way to speaking fluent Forex.
Fluency is the goal.
Absolutely. So keep practicing, keep learning, and keep diving deeper into the exciting world of Forex.
Happy trading.
See you next time.
Bye.